One of the biggest misconceptions that banks spread is that your money grows in your bank account. While the numbers might go up due to interest, the reality is that money doesn't grow in real terms when inflation keeps rising. With interest rates falling far behind inflation, keeping cash in the bank actually leads to wealth erosion. In this video, we'll explore 6 assets that can protect your wealth from inflation and even help you build generational wealth. 1. Precious metals: gold, silver, and platinum. Money is often valued because it preserves wealth over time. However, when governments print excessive amounts of money to cover their debts, you never know when the paper currency you use, such as the dollar, might lose value. This is why financial experts recommend investing in assets that are both scarce and valuable, like gold, silver, and platinum. These metals have an inherent value, and they usually rise in price during times of inflation. For example, gold has increased significantly in price over the decades, from around $400 an ounce before the 1950s to over $2,000 an ounce in 2023. Experts predict it could rise to $10,000 an ounce by 2032. So, while cash continues to depreciate, gold can appreciate. For those not interested in physically storing gold ETFs offer an easy way to invest in gold without the hassle of handling physical metal. 2. Industrial commodities. Scarcity is one reason precious metals hold value, but industrial commodities, too, offer a valuable investment opportunity. These raw materials have wide-ranging utility, which makes them essential in various industries. For instance, silver is used in electronics, medical devices, and even nuclear reactors. Other metals like cobalt, nickel, and copper are in high demand for industries like electric vehicle manufacturing. Over the last decade, the price of cobalt has more than doubled as it became crucial for battery production. Investing in stocks of mining companies, ETFs, or other investment vehicles like futures can provide exposure to these in-demand resources. 3. Safe haven currencies. In a world dominated by fiat currencies, where no currency is backed by a physical asset like gold, geopolitical stability becomes crucial. This is why currencies such as the Swiss franc are considered safe havens. Switzerland's economic strength and stability make its currency highly valuable, especially during times of political turmoil or economic crisis. In fact, during crises like the 2008 financial collapse, money often flows into the Swiss franc to preserve wealth. For those unable to open Swiss bank accounts, there are options like currency ETFs and forex brokers that allow smaller investors to gain exposure to stable currencies. 4. Sovereign guarantees. A currency's value is often tied to the government that issues it, which is why U.S. Treasury securities are considered a safe investment. Despite being fiat money, the dollar is backed by the full faith and credit of the U.S. government. Government bonds and other debt securities are one of the safest investment avenues as they carry little risk of default. Stable government-backed securities, such as U.S. Treasury bills, notes, and bonds, can be a better alternative to holding cash in the bank and provide better returns. 5. Value stocks and mutual funds. While government-backed securities offer lower returns, stocks generally provide higher growth opportunities. However, not all stocks are created equal. Value stocks, in particular, offer lower risk compared to growth stocks and tend to provide steady returns over time. Companies like Nucor, involved in industrial metals, provide relatively stable price appreciation and dividends. For investors looking for steady income, dividend-focused mutual funds like the Vanguard High Dividend Yield Index Fund offer a way to invest in stocks without individual research on each stock. 6. Real estate and land. Real estate is widely regarded as a stable and valuable asset, given its scarcity and consistent demand. Land, in particular, is always in demand for residential, commercial, and industrial use. Despite fluctuations in the housing market, real estate has historically increased in value over time. Investing in real estate can be done without having to buy a physical property, though, through REITs, real estate investment trusts, which pool funds to invest in large-scale real estate projects. Investors can also gain exposure to rental properties with relatively little initial capital. 7. Collectibles. Certain rare items like vintage cars, limited edition watches, and artwork often appreciate over time. Unlike regular consumer items, collectibles gain value due to their rarity and desirability. For example, a 1955 Mercedes-Benz 300 SLR was sold for 135 million euros in 2022, and a painting by Leonardo da Vinci sold for $450 million in 2018. These collectibles act as unique stores of value, offering substantial returns when the right buyer is found. For those who may not have the funds to buy full items, platforms like Masterworks allow fractional ownership in valuable art pieces.